Hello guys, welcome to our accounting class today. We are going to do a question from topic 10, this one, which is accruals and prepayments, applying the concept of the matching principle or the matching concept. So let's see what the question has. Let's see what the question needs. So guys, as I said, the topic is the accruals and prepayments, and here is the question. It is on page 124 for those ones who are having this book. And then before we start the question, what do we mean by accruals? What do we mean by prepayments? So accruals, this is the money that the business is supposed to pay, but it has not paid until it is the end of the accounting period. For example, you are supposed to pay your workers all the 12 months for the work that they have done in your business, but at the end of the year you find that you owe them some amount of money. So that's what we call accruals, or that's an example of accruals. What about prepayments? This is the money that the business pays in advance before it receives the services that it's supposed to receive. For example, the business may decide to pay rent for the next 15 months, and usually the accounting period lasts for 12 months. So the extra months that the business has paid rent, that one is what we call a prepayment. So let's see what the question has. We'll see what the question needs. So it says X and extracted the following balance. Then the balance sheet is there. We have bank. The bank balance is on the credit side. We have capital as first January, July. Discounts allowed, discounts received, drawings, inventory, mortgage repayment, which is supposed to be paid in 2027. We have motor expenses. We have motor vehicles, office equipment, office expenses, premises, purchases returns, rent received, revenue, sales returns, trade payables, trade receivables, wages and salaries. And then there is additional information after the trial balance, whereby we are told inventory was valued at $20,170. Office expenses of $1,100 had been paid in advance. Wages and salaries of $3,280 was owing, and rental income of $1,450 had been paid in advance. So here the trick with this question is the additional information. How are you going to apply this additional information so that you can prepare the statement of profit or loss and the statement of financial position? That's what the examiner wants to know. That's the concept that the examiner wants to see whether you have whether you can apply that concept. And remember, in this topic, what we are going to apply is the principle of the matching concept. So let's start the question. Let's start with the statement of profit or loss. So that is our A. Statement of profit or loss. My handwriting is not that good, so you can bear with me. So we have dollars and dollars. So here we have revenue, which is our revenue in this case is 328.57. You can see 328.57. Then we have sales returns. Here. Sales returns of 1,709. So less sales returns of 1,709. So let's do that. Let's calculate that. 320 857 minus 1,709, 319 148. So 319 148. From there we go to less cost of sales, whereby we have opening inventory, and our opening inventory, guys, is here. Inventory as at 1st July 2019, which is 18,365. So here we have 18,365. 18,365. Then add purchases. So our purchases are here. Our purchases are here. 217,044. We have 217,044. Then less purchases returns. So purchases returns, in this case, purchases returns, it amounts to 2,243. So less 2,243. So it is guys, don't mind about my handwriting. So 217,044 minus 214,801. So here we'll have 214,801. So we are going to add these two. To know the cost of goods which are available for sale. So plus 365, which is 233,166. So we have 233,166. Guys, remember, there is what we call closing inventory. So what are we supposed to do? We say less closing inventory to get the cost of goods which were sold. So closing inventory is 2170. So minus 2170. So minus 2170 to 12,996. So here we have 12,996. So if we subtract this, let's subtract this so that we can get the gross profit. 19,148. So it is 106,152. So that is the gross profit. So here we write gross profit. Sure. So now from here we proceed We proceed. So from here we have add revenues. There are other revenues as well, whereby we are told there is discount, there is a discount received, there is discount received of how much? 2,301. So we have discount received, amount is 2,301. Then we have rent income. I hope it's only those two. We have rent income. Where is rent income? Yes, rent received, which is 8,712. So we have rent received, which is 8,712. But remember guys, down here we were told rent income of 1,450 had been paid in advance. So of this 8,712, 1,450 of it was paid in advance. So what are we supposed to do? So it's supposed to be 8,712 minus 1,450. Why? Because this ones belongs to the next financial year. So that's why we are supposed to subtract that, so that we can get what was supposed to be received during that year. So 8,712 minus 1,450, 7262. So we have 7262. So let's add the two. Plus 2301 9563. So here we'll have 9563. So let's add this. Plus 106 152. Yes, so here we'll have 115 715. So let's proceed guys. The question is not yet over. Let's proceed to expenses, or what we call overhead. So let's expenses. So we have expenses as well. So let's continue. So our first expense in this trial balance is discounts allowed, discounts that were allowed. So we have discounts allowed of 1,754. So we'll have discounts allowed. Then in that case, this 1,754. Then the next one is we have motor expenses. We have motor expenses of 25,600. Motor expenses of motor expenses of 17 for that is 17 for that is 7. Motor expenses of 17 for that is 7. Then next we have after motor expenses, we have motor vehicles, office equipment. We have office expenses of 26,759. We have office expenses of 26,759. So let's go here, office expenses. But guys, remember, we have office expenses of 1,100 had been paid in advance. So the businesses had paid 1,100 in advance. So what do we mean? What does that mean? This is the extra expenses, the extra money that the business paid in terms of office expenses. So in this case, office expenses were 20 what? Yeah, office expenses were 26,759. So here we'll have 26,759 minus 1,100. So 26,759 minus 1,100. So we have 25,659. We have 25,659. Another expense, office expenses. We have wages and salaries. We have wages and salaries. We are told they are 64,122. Sorry for my camera. 64,122. And down here we are told wages and salaries of 3,280 was owing. So still the business had this money for the workers. The business owed this money for the workers. So still this is an expense which the business was supposed to pay during the year, but the business did not honor the obligation. So we are going to add this to wages and salaries. So our wages and salaries is 64,122. 64,122 plus 3,280. So guys, supposed to be 64,122 plus 3,280. Okay, is that the case? Yeah, 280, sorry. Yes, 280. 64,122 plus 280, 67,402. 67,402. So let's add total. You have total expenses. So let's add all these expenses. So we have 67,402 plus 25,659 plus 17,437 plus 17,554. So our total expenses adds up to 112,252. So for us to get the profit for the year, we'll just subtract this. So that one minus 715. So our profit for the year is 3,463. So that is our profit for the year. for the year. So as you can see, guys, that question is that simple. That is the first section of that question. So after here, we are going to prepare the statement of financial position. And guys, I urge you to subscribe to our channel, comment, give your comments so that we can improve. We can improve on where we are not doing our best. And then share with your friends, guys. Share with your friends so that they can enjoy or they can benefit from our services. Remember to put on the notification button so that when we are going to upload the second video, you'll be notified immediately. I'm going to post my number, my WhatsApp number down there, so that you can send questions if you have, and you can also send suggestions for the topics that you want us to tackle. Otherwise, thank you for watching up to this point.